What are the implications then of these comments from the NDRC? What are you reading into these lines?
I mean, I think what we've seen in recent weeks is this steady drumbeat of comments from the authorities expressing their displeasure at high commodities prices, and they're obviously worried about inflation. I think when you look at these comments today, they're targeting the futures market. China's futures markets are, reasonably notorious as a playground of speculators. And obviously when you've got a lot of speculative cash that's also flowing into markets that are seeing high physical demand, that's going to push prices perhaps beyond the fundamentals of where prices should be. So I think you're seeing the top economic planning agency basically targeting futures here and saying there's too much speculation and that's fed into commodities prices.
Is this as far as we'll get verbal intervention, or are we expecting more sort of tangible measures to stamp out speculation?
The exchanges themselves, they have tightened some of their trading limits. So you have seen these measures. And you've also seen commodities futures come off over recent weeks. So, the records that we saw in contracts like copper and steel, those have moderated. But clearly, China isn't taking its foot off the pedal. It's still concerned by what it sees as speculation in futures.
Jason, which sectors are most vulnerable?
The sectors that are probably most vulnerable are those that are most keyed to a peaking in China's economic expansion and a peaking in the credit impulse, and that's basically new credit as a proportion of GDP. So I think you're probably looking at those commodities that are used in infrastructure, that are used in property. So that's aluminium, that's copper, that's steel, iron ore, those kind of things, old economy commodities.